Just a quick but important heads up before we dive in. This report is purely for educational purposes. It is absolutely not financial advice. As you know, all crypto investments carry some serious risk.
Welcome to the Day 69 Health Report, and wow, what a day it is. We are looking at a story of just incredible contrast. The DexFi Fund just smashed through to a brand new all-time high. And at the exact same time, the broader crypto market is gripped by a level of fear we haven't seen in a good long while. So let's break down what in the world is going on.
And there it is, over $2.18 million. That's a new high watermark for the fund. Now, that's a fantastic milestone all on its own. But what makes it truly remarkable is the environment this was achieved in.
And here's the other side of that coin. The Fear and Greed Index has just collapsed to a 10. That's a level of extreme fear that usually signals people are panicking and selling everything. So how is it possible that the fund is thriving while it seems like everyone else is terrified? That's what we're going to dig into.
So here's the game plan for today. We'll kick things off with that headline contrast. Then we'll dig into the capital efficiency that's really driving this growth. After that, we'll decode the latest volume and yield numbers, check in on our expansion on the BNB chain, and then we'll talk about a really key concept, structural versus cyclical strength, before we wrap it all up with a final verdict.
Right, the really crucial point to get here isn't just about the price going up. This is a fundamental, a structural high. It's about the very engine of the fund itself getting stronger.
And this slide, this shows you exactly what I mean. Just look at this growth. In only 11 days since that last market crash, over 11,000 new bonds have been minted. That's a 27% increase. Every single one of those new bonds strengthens the fee-generating engine. This shows real deep conviction from investors at a time of maximum fear. It's incredible.
So how is this growth being fueled so effectively? Well, a huge part of the answer is a much more aggressive and efficient use of capital. So let's pull back the curtain on the Aave margin strategy and see exactly how it works.
Okay, this is the strategy in a nutshell. It's a simple flow, but it's incredibly powerful. First, the fund supplies its ETH as collateral on Aave. Then, it borrows stablecoins against that ETH. And the final, key step? It deploys those borrowed dollars directly into the vault's liquidity positions. This means more capital is out there earning trading fees, all without selling the underlying ETH. It's pure capital efficiency.
And you can see this strategy was deliberately expanded, just in the last 24 hours. The ETH supplied is up over 16%, and the amount borrowed is up a massive 37.5%. Now, you might see more aggressive on the health rate and get a little nervous, but check this out. The liquidation price for all that collateral is still way down around $750. With ETH near $2,000, we have a huge cushion.
And here's the beautiful result of all that efficiency. The fund is running with basically zero idle capital. Just over $1,600 sitting in the wallet. Every single other dollar is deployed and working hard to generate fees. This maximization of capital is without a doubt a key driver behind that new all-time high.
All right, next up, let's talk about the daily profit. Now, these numbers might seem a little low at first glance, but it's super important to remember we're just coming off a long holiday weekend, and that always has a predictable temporary effect on trading volume. As you can see, volume is already on the upswing. After a little dip for the holiday on Monday, Tuesday's volume climbed right back up to nearly 8.4 million. That daily profit figure you saw is just a lagging indicator of that quieter weekend, and we fully expect it to normalize as the week gets going.
This really shows how we think about performance. While short-term APR can have these awesome peaks like the current 123%, we really focus on the steadier, long-term path. Our true benchmark, our North Star, is that 9-month average of around 65%. It smooths out all the daily noise and gives a much clearer, more honest picture of the fund's health over time.
And hey, here's another really healthy sign. The diversification is improving. The concentration of volume in our BNKR pool has dropped from 48% all the way down to 32%. At the same time, the Zora pool has surged to 41%. Spreading that volume across more assets like this just puts the fund in a much healthier, more resilient position.
Okay, let's talk about another key theme for today, and that's proactive growth. While the rest of the market is fearful and hiding, the fund has been actively expanding its footprint, especially over on the BNB chain.
Just look at these numbers. The value on BNB Chain is up over 7% overnight and an incredible 86% since the crash. And this isn't just numbers going up passively. The fund has been actively opening new vaults, including a $33,000 ZEC pool and a new $10,000 Bitcoin-pegged asset pool. This multi-chain strategy is just such a powerful form of diversification.
So this all builds to what I think is the most important concept for today's entire report. It's understanding the difference between the fund's underlying structure and the cyclical market weather. Think of it as the engine versus the weather.
And this slide? Wow, this slide really says it all. Just 11 days ago, the market was in a crash. Today, the fund's value is up over $800,000. The bond count is up by more than 11,000. The BNB deployment has almost doubled. This is the engine being rebuilt, bigger and stronger than it has ever been.
Now, you might have noticed the bond price ratio has declined a bit. It's a fair point. But this is a perfect example of what I mean by cyclical market weather. This is not a structural problem with our engine. It's happening simply because altcoins as a group have been underperforming ETH lately. When that market trend eventually reverses, this ratio will recover.
So, with all of that data on the table, let's pull it all together and deliver the final health verdict for day 69. Our health dashboard shows a sea of green right where it matters most, in the structural components. Fund value, bond growth, capital efficiency, and diversity. All green, all strong. The yellow items, those are the temporary cyclical conditions we just talked about, the post-weekend volume and the market-driven ratio. And that single red flag, that's just market sentiment, an external factor that the fund is clearly proving it can handle exceptionally well.
And this leads us to one very clear conclusion. The fund is structurally healthy. Its core engine is stronger than ever, and it is perfectly positioned to capture value when market volumes and sentiment return.
I'll leave you with this thought. 51,000 bonds, operations across 4 chains, near zero idle capital, and all of this was built while the market's fear and greed index sat at a 10. That's not hope. That is a structural advantage.
And to close out, let's just quickly review the full risk disclosure. This report is for educational purposes and is not financial advice. The APR is variable and not guaranteed. The Aave margin strategy does introduce liquidation risk. A 10% exit fee applies to bond redemption. And it's so important to remember that past performance does not guarantee future results. Always do your own research. Thanks for watching, and we'll see you for the next one.